Okay, everybody. Well, I apologize for getting this out a little bit later. The boys and I were out at the library, and we spent a little bit more time than I had originally planned. Again, I apologize for putting this out a little bit later. We're developing this topping pattern here. Remember, I've been talking over the last couple of days. We've got to watch for this rounding over process, and what we've got to keep our eye on is the volume and making sure that it would actually be a fairly good thing if volume did spike up, but price was unable to follow through. So now we're seeing that whole process begin. So let's zoom in a little bit, and there we go. I wanted to clean up the averages that I had displayed down here on the volume. That can be pretty confusing. Okay, so here, this is a little bit of a longer bar. Okay, normally I've got a 240-minute bar up. This is a 720-minute bar, and what this does is it puts 3 bars per day per 24-hour period. And what you see generally is the biggest volume bars here is the London session. And I like to do this because it gives me, the London and U.S. sessions. If I put my cursor here, you can see that this bar ends at 12 o'clock Eastern Time, and the one before it starts at midnight. Okay, so you've got one bar. So you've got one bar from 12 a.m. Eastern Time, and it ends at 12 p.m. Eastern Time. So this 12-hour period in here is just beautiful as far as seeing what happened during, this is going to take in the entire London session and most of the high activity in the New York session. So what can we see here? Well, we can see, first of all, that as the market started spiking up and breaking through this level here, volume on average did what? Let's go ahead, we'll place a line here, and you can see volume actually started going down. Our price crept up a little bit higher. We see one volume spike here. That happened right there on that bar, and then another volume spike here. That happened right there on that bar. So as the market was breaking through resistance here, we had a volume spike. As the market came up to resistance here, we had a volume spike. Okay, all this is pointing to basically a bearish view on the marketplace. Okay, so if we're bearish, then what do we need to do? Well, we need to start watching for signs that the bearish view is going to come about. And so what does that look like? What is it going to look like if the market is bearish? Well, first of all, we're going to see lower lows. Okay, so as we're looking at the higher time frames, like 720-minute or a daily bar, the lower lows are going to be a little bit harder to see. It gets to be a little easier to see when you start going down to the hourly time frame. But we're going to start seeing lower lows. What else are we going to see? Well, we're going to start seeing big bars down. We're going to start to see volume up on down bars. Okay, all of these things, 1, 2, 3, lower lows, big bars on the down bars, volume is up on the down bars. We're going to see price retest. Okay, that's what? The Little Dipper pattern. All right, so we'll see the market move down off of this high, come back up, and retest. Okay, what is the market going to retest? Usually support. Okay, so if the market is gaining support right in this area, you'll see that the market will then, if this is the support level, you see the market break down, come back up, and retest. So you've got a good short position, good low risk short position right there. Why is it low risk? Well, it's low risk because we see volume dropping off, we see resistance starting to build, and we see that the market is already up. Okay, so all of that put together is where you can start keying in on some of the bearish patterns. Now, the question then would be, well, hey, if you're bearish, shouldn't you be short? That depends on your risk profile.